Hey everybody, tonight is October 25th, after hours, taking a look at the S&P 500. We just heard from Amazon and Google between poor forward guidance and missing on revenues and so on and so forth. They're both down in the after hours. And futures took a clip into the lockup, falling down from just above 2,700 to all the way down to about 2685 as they went into the close. So we're kind of waiting. It's about 5:40 Eastern time right now as I'm making this video, and futures will open up in 20 minutes, and we'll see where they open from there. But Amazon is down like 100 points or something like that after hours. So anyway, this was a video I was going to do for you guys for this weekend, but I thought maybe I'd move it up to today because it's an idea that I've been sort of brewing up here over the course of the last few days. And if we're going to have a big Black Friday flush out tomorrow, it might be good to know about this. Right now you're looking at the fully backed out gap map. This is the additional chart that I've been posting lately. It is the roadmap, but just showing the gaps that we have going on. And with yesterday's big flush out, we filled this final gap that we had left for all of 2018 from below us. We have gaps left now up above us, but there's none left for this year down below us. In fact, the next gap that comes in, and I talked about this on last Sunday's video, is this one from September 2017. A pretty big one too. It's the gap support starts out at 24.75 and fills down at 24.61. So this was a really big, gigantic gap up open all the way back here in September, and you can see that this led us all the way to the January high. And when we came down here in February of 2018 and hit 25.32, I think a lot of people were expecting for this gap to fill. They really got caught off guard, and that's what made this bounce so fierce. And we've never really challenged this low again all year. So this gap is still sitting down here unfilled, and so maybe that's something that we need to talk, more seriously about having happen. Now that there's a good possibility that we're going to break this trend line that we can draw up out of this gap, in fact. And I converted this trend line into a channel because my software allows me to take a trend line and redraw it as a channel if I want to. So I went ahead and did that, placing the top of the channel on this January high, and just waiting to see if this is going to continue to hold. When we get in here a little closer up, you'll see that this this line, the bottom of this channel, comes in about 26.49 and rising as of today, and our low went down to 26.51. So if we made one more low and held this line, maybe we aren't going to go fill this gap, but I have the feeling we could even gap down open and just flush right through this level. And I think that if we flush through this level, I sort of touched on this last weekend on the video, that maybe the end game is going to fill this gap. And one other thing I wanted to show you about filling that gap is taking a look at the roadmap here now. These two blue boxes, this is how I do a quick measured move, from a visual standpoint, and then I go back to a calculator and I confirm it just to make sure. But if we draw around a box around the all-time high to this initial low that we made at 27.10.51, and when you look at this 27.10.51 level, you can see that it's really been sort of a line in the sand here, and we really felt that in trading it this week, especially yesterday and today. Today we really had a nice breakout in the afternoon once we got above that level. But then we came down and we wound up closing underneath that to end the day. So that's two closes in a row underneath this 27.10.51. Well, what if we were to double down that move from the all-time high to 27.10.51? That would take us down here to 24.80. Okay, so 24.80. To fill this gap here back to September, we need 24.61. So maybe we would hold 24.80, or maybe we would fulfill the 80 handle rule, breaking through 24.80 and going ahead and filling this gap. In filling this gap, we would be 16.3% off of the all-time high. So there's your 15% off and your little overshoot of it, because there's always that phenomenon that you never really hold right at 10% or 5%, because those are the kind of numbers that funds and people in general tend to set their stops at. So there's usually always people that are going to sell at that point no matter what. And so it ends up just sort of, overshooting the level just a little bit. So 16.3 might be a little overshoot of that gap. If we were to get into a situation where even feeling this gap isn't enough, there are just a treasure trove of gaps that were never filled in 2017. And eventually, all gaps get filled. And ultimately, where we were when we elected this president of ours, we were down at 21.25. We were all the way down here. And so, chances are, I don't know, if things were to get that bad, maybe the market is telling us that they want to take it all the way back to where we started from with this president. Before we had tariffs, before we had, a president that gets on, national television and shit talks our Federal Reserve chairman. The market doesn't like those kind of things. So who knows? Maybe the market is going to send a signal and take it all back, all the way back to 21.25. But let's not go that far. Let's just talk about here. This is bad enough. 24.60, 61 fills a gap. If we were to simply sort of maybe not quite fill that gap and leave everybody waiting for it to happen, and sort of like what happened in February of this year. Maybe all we do is we go down to 24.80 and we hold, and then that would be that. Okay, I hope this video helped you and doesn't give you nightmares tonight. See you tomorrow. Good luck and good trading.